Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as stockcharts.com. So, the main problem with this bull market is it is uphill all the way, and we're seeing quite a bit of sector rotation right now, so we're going to cover a little bit of that today. I want to talk about onshoring because the industrials have been on fire. They've literally been doing great. And one of the areas that's been doing so well has been the new building construction and that type of thing. So I'm not going to focus on the industrial side of it because we've been talking about that a little bit already. I want to focus on the real estate side of it because there is big changes, and real estate was one of the biggest areas of improvement recently, and I'm starting to see a lot of their different companies jump into the top of the scooter ranking. So that's what I want to focus on today. And I think you'll be shocked at how good the charts look and maybe the size of the opportunity. If you like the work we do here at Osprey Strategic, you're more than welcome to come and try what we have on our website. Take advantage of our 1-month trial offer. It's just $7, and you can see everything we've done, all of our newsletters and all of our daily setups and all of the sectors and themes that we're focused on right now. So with that, I'll jump into the charts and we'll go from there. So first of all, here's the SPY and the QQQ. This is Wednesday afternoon at 2:30 Eastern. So we'll be covering this off. Now, one of the things we're looking at here on the 60-minute chart is we do have kind of a lower high in momentum kind of building here on this recent high. So we've jumped up, and now the real question is, do we just run out of energy here and start to leak down? And there's some reasons to suspect something might be up, but until the chart changes, I don't see anything real necessary. One of the things I'd like to do is draw a trend line under here and draw a trend line under here. So let's just do that. And the reason that I like to do that is to make sure I understand when the trend in momentum is changing. So that helps me a little bit. And then here we've got pretty much this big upward thrust. So I don't think that line's really in play yet. This is the 20-day, the 50-day, and the 200-day moving average. So we'll just leave that line out of it for now. I think more importantly here, you can see that the S&P 500 ETF is better than 87.5 of the other ETFs out there in terms of price performance right now. So it's really been a dominating force in the markets so far. Okay, and then we also had the NASDAQ that was doing the same thing, so I'm going to go with the Qs. And one of the points I want to make on this one is we've started to see the uptrend in relative strength start to wane. Now, it's not awful. It's just kind of performing in line with the S&P 500. So it's not ugly by any stretch. It's still just fine. I think what we'd probably want to make sure of here is just that line looks crooked to me, but apparently it is straight. Can always test that. Yeah, so that's straight. And what we want to just keep in mind is we don't want to see the NASDAQ start to underperform. Typically, that's when we get periods of market pullback. You can see into the end of December, we started to see the NASDAQ underperforming. So we'll just watch here and see how this works out. Now, one of the trend lines I really like on the NASDAQ has been this one. And as long as we continue to wobble in around this 2% level, whether or not we break this uptrend line isn't critical. But what would be critical is if we all of a sudden start to bomb below zero. And one of the reasons I suspect that right now is Helene Meisler on Twitter pointed out this morning, that all of a sudden we're starting to see the utilities up by 5% since last Thursday, and they have been underperforming in a big way. So if we just went XLU and take a look at that, like this is a pretty big jump here. So from 64 to 67, very, very quickly, all of a sudden some love for that. And you can see the PPO is about to go positive here. So let's just watch and see if all of a sudden we start to see the defensive sector start to take a lead. I wouldn't expect that, but if that's what's going to happen, at least we'll know what's going on. So That's a big thing for me. And again, when you start to see this jump above 25 and it becomes one of the better sectors in that March-April timeframe, utilities did really well, and the other markets were kind of flat. They bottomed with banking, and then they tried to rally for a period of time. But let's just watch and see all of a sudden if utilities start to get a little bit of a push higher, and people start to move away from, let's say, tech as an example, or something else. And speaking of that, let's just go this way. IGV and SMH, when we look at those two, one of the things so you have the high back here. Remember how the S&P is up near its prior high. The IGV is a little bit lower, not awful, and the SMH, the semiconductors, is a little bit lower. But you really notice this change in momentum here, where there was a lot more force on the prior high. And here you've kind of got a sideways consolidation basically since the NVIDIA spike. And you've really haven't made any progress in that area. And again, this is the ETF. We could go to an individual chart. When we look at the IGV, the one thing I'm noticing, again, these things are starting to flatline compared to the S&P 500. And so if you're not outperforming the S&P 500, then people are less likely to put money towards that industry group. So we want to watch and just see how this performs. Now, I'm not expecting it to become anything awful. It's just more of a question, can it continue to outperform? And so far, again, we're in the top right-hand corner of the chart on a weekly basis here, so let's not really complain. Charts still look pretty good, but those are a couple of things that I'm watching for as we go forward too. Now, I mentioned heavy construction, and there's a whole bunch here. These charts are in pretty good shape. You can see they're living up in the top right-hand corner. This one's, very close to 52-week highs. Nothing wrong with that. AMRC, this one's a little bit more downtrending. Actually, I didn't reset this. Let's just go do that very quickly. So some of the charts have a strong scooter ranking, and some are getting a little bit weaker, but we can change that. So we're going to go to the edit list. Oh, there we go. I haven't even got it in sort order. So my mistake here. Let's put it into summary mode. Click on the scooter rankings. And what we want to watch for is how many stocks are up in this top performing category above 75%, and in this case, roughly 2/3. So it still looks pretty good. Just don't want to start to see it leave the building. So with that, we can, now that we've got it in the scooter ranking, we can go down to the bottom and just say number in sorted order, and then that's going to give us the strongest charts first. So with that, when we click on these, you can see that's a little better. That's what I was expecting to see. View all. And then what you see here is these charts are, ripping pretty well here, and we just want to make sure that that trend continues. Look at how beautiful this one is. Quanta Services just continuing to work its way higher. So $23 back on 2020. 3 years later, this thing's at 200. Who would have expected that out of an industrial stock? So here's Great Lakes Dredge and Dock, and it's really been accelerating since April. A nice thrust higher, the scooter ranking moving back up above 75, so that looks good. And again, I think this heavy construction area is going to be a big one. When I was in Arizona earlier this year, you saw the Taiwan Semiconductor factory being built, and it is massive. Lots of different issues there. One of the companies saying they hadn't been paid for over a year on stuff they supplied, and just it's hard to get a hold of anybody because everybody's not local that's paying the bill. So pretty interesting dynamic going on with some of the contractors I talked to, and they were quite upset that they hadn't been paid in over a year, and we're starting to considering holding back product from them. And it's just, really interesting building style going on there. Anyway, lots of big construction projects. We've got the semiconductor campus going up in the Northeast. We've got the government giving grants towards that. We've got the Infrastructure Act. Lots of these things are going forward. And so this heavy construction group should continue to do well. Now, one of the areas, obviously, when you're building some of those sites, you need land. And if you've been involved in heavy or in industrial park construction, you know that these buildings can be long and wide and go forever. Sometimes it's important that they're on a train track or river frontage or ocean front or a bay of some sort, depending on the type of industry. Well, right now what we're seeing is with the onshoring, things like semiconductors or whatever, these big parks being built around Phoenix, I think each project's roughly 20 billion if I'm not mistaken. So these things are a huge volume of money going in, and when we look at that sort of economic development, that's pretty large. So the one thing that I want to keep in mind here is talking about the real estate underneath these buildings, what's going on, because obviously real estate's been badly damaged. But I have 200 companies on this list. And look at how many in real estate have a scooter ranking better than 75. So their charts are outperforming more than 75% of the stocks in their universe. So in the small cap, mid cap, or large cap universe, this is pretty big, in my opinion. To get all the way down here. And again, just taking that group of companies in the real estate sector and saying, okay, what's going on? So what I've done is I've put the best ones first in this case and got the charts all set up. But what I'm surprised at is some of these charts were $30. They went down to $2. And if you think that the interest rates are close to the top, maybe they're not at the top, but they're close to the top, then if you think that, then what would be important for real estate is it's probably not going to get much worse. And so you're starting to see some investment rotate back in. And I always have trouble, well, years ago I used to have trouble with that understanding. Nothing's getting better there. Why is this thing popping? Well, the thing is, it's just not getting worse anymore. So if the worst or almost all of the worst are behind you, then what you start to see is these institutions are starting to take positions in these stocks. I think that's a pretty notable thing to remember. And again, just looking here, we go all the way down to 39 stocks that have a scooter ranking of 75 or better. That's a big number considering how bombed out that group was. And if we say how many of them are performing better than 50% of the stocks or whatever, so the 50% level for the scooter ranking, we're way down here at over 106. So out of the 200 stocks in that group, over 50 of them, the price action on them is starting to outperform the average stock in their universe, small, mid, or large cap. I think that's a remarkable recovery from where these things have been. So I want to focus in on that a little bit and just try to highlight it. Now, one of the things we can do here is we could add some other columns, and we could add the industry group here, and we could sort by that if we wanted to, and at least get a feel for the different sectors. And here you have diversified REITs, and they're doing okay. Hotel and lodging, okay. Nothing really perking up here. But industrial office REITs are starting to have some stocks up in the dominating part of this area. And then mortgage REITs, who would have thought that they'd be back on the top of the list, but 10 of them are above 75, so that's pretty good. And then real estate development in general, we've got 5 or 6 that are perking up. Real estate broadly, just real estate services like Zillow, a few of them. And then when we get down here into residential REITs, not really much going on in that area yet, so that's still pretty quiet. Retail REITs, still pretty quiet, but there's 5 here that are performing better than 75%, all of them small cap, interestingly. And then getting down into the specialty REITs, we've got a couple here that are also blossoming. So it gives us an idea of at least where to focus. Now again, specialty REITs, a couple of them, retail REITs, not many, just 3 or 4. Residential REITs, almost none, only one better than better than 75%. But again, getting into real estate services, only 2. And yet when we get up here into real estate development, there's 4 or 5 in here that look better. So they're around... now that I've sorted it differently, number 3 and number 4 and number 6 are all inside that group. So that's pretty important to note. So we'll check those out when we go back and look at it in the individual stock view. But again, just ways to kind of sort the data so you can check it out. But look at these mortgage REITs here. These things are doing pretty well, in my opinion, and I just, they were one of the bombed out areas. So let's go back now and just flip this over, and we're going to look in chart list view. And again, what chart list view allows us to do, if you auto size it, it'll fill it out to the page. But if you don't, you just leave it this way, then you're allowed to annotate. But if I click this auto size button, then the annotate option goes away. So I like to leave it off. And again, I've set most of these charts to be the same size. If they're not, we'll go back and fix it. So here's senior housing, and this one, 5 years ago was a $12 stock, and it got down to 60 cents, and now it's about $2. So that's a pretty nice double, even quadruple off the lows here. I think the real question is, the chart wasn't healthy for a long time. I'm not sure that it's the place I'd run to, but obviously some people are making some serious money there. This iStar, one of the things I noticed about it, this big gap on it tells me that the stock had a stock split. And when you see that, what you can do, if you, so what I did was I Google iStar stock split. Sure enough, they had one. So I will just go in and report problems to StockCharts. You click on this and just scroll down here, and you're going to add this stock had split, and here's the article that said that. So you can always help, and that'll clean up your data for you as well. So I like to do that in case they've missed it. And obviously they're going to get the major ones, but some of these companies they might not have noticed. So here's Greenbrick Real Estate Development. This thing probably surging up quite nicely, obviously. Here's Redfin. And again, this was down to $3.74. It's at $15 now, or $14. It was at $98 before. So this thing has some real room to run if it can keep going. And again, last week it had a huge move up, and this week so far performing in line, but it could continue to run here. EXP World Holdings, this one's just starting to break out to new 52-week highs. Consolidating for 5 weeks. Any sort of breakout above that looks pretty good. This used to be an $88 stock, and it split 2 for 1 back then. And now here we have it sitting around this $20 level with a 4-cent dividend roughly every 3 months. So the stock looks okay. And again, breaking out to new highs. Looking at this one, this one's obviously out of South America, and the stock's really doing well, taking off to the upside. Leju Holdings, this one, huge downtrend. Again, this was $39 in 2021. It got down to $1 and is starting to work its way higher. So if you have some patience, at $2.50, is this thing a deal? Who knows? It looks to me like it's probably got room to run if you're patient, and doesn't tell you about the yield on it. So might have to do some investigation for that. But here is Arlington Asset Management. This one, same thing. Looks like a reverse split to me. So anytime you see a gap like that, you have to just go check it out. And then Drive Shack, this one was $4. It's now down to 40 cents. And I don't have any idea what they do. Consumer discretionary recreational services. I thought I was in industrial real estate, so I don't know why that stock is in here. Industrial Logistics Properties Trust. Here, this one, this is a good example. This one's $27.50 down to $1.64, rallying up to the $4 level, just getting above the 200-day or the 40-week moving average now. Scooter ranking starting to move into 70. And again, real quick, what you're looking for is some stock with some upside opportunity. Well, here, if over the next 3 years this thing could start to move, it's only got a 0.5% yield, so they've knocked the yield back quite a bit already. It was paying 33 cents, it dropped to 1 cent, and now it's starting to move up. So maybe you'll start to get some more dividend coming in. But again, that stock is just starting to work its way out of the hole if we zoom in on it. So if we just type in ILPT, what we're going to see here is on the daily. The chart obviously has had a great run. The real question, can it go higher? Well, these are the kind of charts where it pays to go look and see what's going on in the company and perhaps some of the recent presentations to see what's going on. I like the fact that this scooter or this PPO has finally broken and the scooter ranking is starting to hit 75. So there's some reasons to look towards the sector that I think are pretty important. Now, here's Zillow Group. Again, this doesn't look like much, but this is 26 to 50 since October. And even since January here, this jumped above $40 and is slowly working its way higher. It was a $208 stock. I don't know how soon it gets back there. But again, this thing gently is kind of working its way higher in a sector that's starting to improve, and the scooter ranking's holding up pretty good. So the real question is, can you own it? Well, it all depends on your timeline, but some of these look much better. The Necessity Retail REIT, this one, choppy and now just starting to break back out. So maybe they've got some opportunities on the horizon, up 5% this week. Entertainment Property Trust. This one's working its way up from 33 to 47. Pretty nice move, and topped out at 51. So maybe the upside isn't quite as much there. Empire State Realty. This one's got a big downtrend going on here, around 775 now, up over 1260 back in 2021. So is the slide over? I don't know, but again, it's in the area that I think could probably do better. Industrial and office REIT. Tanger Factory Outlets, I think we've all been to those malls. This is $17 going to $22, and it's breaking out to new all-time highs, so maybe retail isn't as bad as we think. 5 Point Holdings, this one's just starting to break out of a 6-month base. That looks better, but again, go do your own diligence and just see what's going on there. But PPO moving above zero, full stochastic getting above the 50 line finally, and the scooter ranking up over 80 suggests something going on. Erstad Bidal Properties breaking out to new highs here. What's wrong with that? That chart looks okay. Plymouth Industrial REIT gently working its way higher. Looks like new 52-week highs this week. And again, PPO above zero and starting to turn up here. Nothing wrong. Life Storage. Again, you see this kind of bombing out from 145 to 92, back up to 145 and a pullback. Go check out what they do and just see if there's something there that might interest you. St. Joe Real Estate Development. This one's starting to move to new 52-week highs. That looks pretty good. And again, it was only $61 before. It's only paying a 1 cent dividend, or 10 cent dividend actually. But trying to get going, and again, that looks like it's paid roughly quarterly. And then Hospitality Property REIT. This one, started to surge, pulled back here for a couple of months, and it looks like it could turn up again. And we've seen good price action out of the travel industry, so perhaps this is another one that could enjoy some upward thrust there. Colony Credit Real Estate, just a gently sloping downtrend. Can it finally break out of that? If you're starting to see the rest of the group go, it's that type of thing that I would be more interested in, and the industrial office REIT area has been one of the ones that we're starting to think about. Apartment Investment and Management, this one's just sideways, so I don't see any real reason to jump in, and it wasn't one of the better sectors or industry groups. Retail REIT, this one has a big downtrend and is starting to break that downtrend. I like that. Moving back above the 40-week moving average and up a little bit. Okay, so you get the idea, but again, some of these charts still aren't fixed, but lots of them are starting to see the price action push the scooter ranking up to be one of the top performing areas of the market. And if you can see some of those stocks start to get going, you can make some money. Now, when the scooter ranking wobbles like this, I call it between 25 and 75, it's just basically performing in line with the S&P 500. It's not outperforming or underperforming, it's just performing in line. Now, when it gets awful, it's a reason for me to want to check my work and say, is it an opportunity for it to turn back up here? Some people only like to buy new highs. Well, this one's very close to 52-week highs. Let's call it 7, maybe even 10-month new highs. Perhaps it can get going. So taking all of this into account, I think the critical component as we go forward is, look in areas that are beaten down, and perhaps, again, if you've got a longer timeline, some people trade more. Some people would rather just get something it looks like the bottom is in. So your ability to lose money might be less, and your ability to find some upside profit over a period of time could start to come to fruition. Now, the one thing I will point out on this chart is you can see these lines dropping, and that is when the dividend is actually paid. And so what I wanted to show is how you get that. So by putting events on here, and you can put on splits or you can put on all, which includes dividends. And the idea behind that is it'll drop down those little tags. So you can just see. So as an example, if you were focused on getting the next dividend check, well, that's not going to come in for another, 9 weeks or whatever. So you're probably better off to wait if that was your intent. But again, if you're looking for something that's to farm dividends, you could find something that paid 2.5 months ago and just see if it's ready to go. And it helps if you're finding it in a group that's turning up. Okay, so lastly, one of the things we do at Osprey Strategic, this is our homepage here, and what we also have for you is these opportunities pages. And again, what you'll do is you'll go in, this is artificial intelligence or gold or healthcare, and we try to keep updating these every week with charts that are starting to take shape. Now, just because a chart has broken out this week doesn't mean we put it on or take it off the list. A lot of times we're trying to find setups that are ready to break out. Some of these charts will have run a ways, but you can find charts that have run a ways and then pull back a bit and give you another opportunity to look in there. So keep this in mind if you're looking to try and find ideas by theme. We think this is one of the better ways to go, and hopefully you'll get some ideas of some things going on in that space. And with that, I'm going to let it go. Calgary Stampede starts Friday and runs for 10 days for the greatest outdoor show on earth, and some of the bars around town say the most fun you can have with your boots on. So anyway, looking forward to getting together with some of my friends and colleagues there. I've got a couple of commodity companies in town that are hosting some parties, so I'm going to go to those. And hopefully with that, we'll have a little bit of fun here as the summer continues on. Hopefully you enjoyed your Independence Day, and I know Canadians were out enjoying the good weather for July 1st or Canada Day. With that, everybody, thank you for taking the time to join me on Market Buzz. Market Buzz airs on StockCharts TV only now. It doesn't have a live broadcast, but you can usually pick it up on Wednesday afternoons. With that, thanks, everybody. Bye-bye.